So very similar to the accrued expense. So the last two is obviously accrued income and income received in advance. This one would be what type of elements? So you've earned income, accrued income, you've earned income, but you haven't received it. It's an asset, exactly. Okay, why is it an asset? Because I have to get something in the future. Right? It meets the definition of a resource. Okay, so we would say, as part of the definition, assets are resources that we have that will give future benefits. Okay, then draw a timeline, the same as what we did previously. And then we can use the information here. Let's see if they give you a nice example. Okay, they do actually, that's good. Right, so here they said recording outstanding revenue. So this particular textbook refers to this as an outstanding revenue. Anything outstanding is accrued. They say here when revenue has been earned during a financial year but has not yet been received, the revenue due must still be recorded in the financial statements. That makes sense. Okay, so same as before, draw a little timeline. You need to show that as well. So the end will be 1st Jan and then the end will be 31st December, but then put a little gap in between. Okay, the in between is going to be what we haven't paid, which we'll discuss just now. Great, so our timelines are just important just for understanding. Sometimes you get more difficult questions that you might have to interpret, and then it is a good idea to draw a little timeline. If you've got a timeline, it makes things a bit easier to understand. Okay, the example is quite short, but the right concept gets explained, which is fine. So we'll use the information in the question. Okay, perfect. So 1st Jan would be the start, and then the end would be 31st December. That's the financial year, 12 months. Okay, just some revision. Right, then somewhere before the end, can you put another line? And then we need to reference the accrued income. Yeah, so somewhere just before the 31st, just like a little line extra, little extra line there. Okay, so the question says here, still Laurie again, so same example. Laurie sublets the rooms above her shop to Dan for a rental of $50 per week. At 30 December, Dan owes 2 weeks worth of rent. Laurie's income statement would show a full year's rental income of how much?
The what?
Yeah, so $50 times 52 weeks in a year. Okay, but they've given that amount to you, so they've calculated it. 2,600, even though she only received 2,500. Okay, so if we're going to take that information, we're going to put that on the diagram, we need to put 2 bullets. So bullet number 1, you can just say 2,600 is earned for the financial year. But that's everything. So we've completed the year and we've rented out this building or this room for the entire 12 months. All right, that's important. Okay, because we're looking at the financial year. Then the second bullet, you can say $100 is still outstanding from the tenants. And that will obviously be described in a paragraph. Okay, this paragraph is quite short. It's quite simple to understand. Okay, obviously we're taking out the key points. All right, so we've earned 2,600. We're still missing 100 in terms of the receipts. Okay, and then we've got the NB. In blue, you can say how much is the income?
2,600.
Good. Okay, so the total would be the income. So you can say NB, income of 2,600 must be recognized. So we don't have a choice. We have to recognize 2,600, even though we haven't been paid everything. That's not the point. Okay, the point is you've earned it, you record it as an income. Okay, and then the last bullet there, you can say 100 must be provided for as an accrued income. 100 must be provided for as an accrued income. Okay, so now let's draw that on the diagram, because now we've got the information. Right, so what are you going to show here on the diagram? 1st Jan to 31st December is going to have what?
2,000.
Yes, the total, correct, good. Okay, so maybe draw like a bubble or a line or something, but show start and end, and show 2,600. That's important, right? Because we've earned the full amounts. Whether we've received it or not makes no difference. Okay, so 2,600 earned. That's the most important word. Right, last week we spoke about accruals and prepayments. So accruals would be something that's still going to happen. Okay, so this would be an accrual, right? Meaning we're still missing 100 in terms of the receipts. Okay, so then take a color and then put from 1st Jan. You can maybe label this October, maybe. It doesn't really matter what month. Okay, so from January to October, you need to draw a line and show 2,500. Okay, and you can write there 2,500 received. And then another line at the back of the timeline, yeah, that little bit, and you can just say 100 still to be received, and that you need to highlight. Okay, that's the accrued income. Right, so the accrued income isn't the 2.5. The accrued income is just the 100. Okay, but obviously from an accounting point of view, you only record the full amount. Okay, you have to. Okay, so you've highlighted a few things there. I would like you to do the same thing here, just for that bit. Okay, so accrued income and what the actual accrued income is. Okay, then we can just end with the disclosure. They don't really give disclosure here for these two, okay, but they did a better job with the first two. So the textbook discusses it, but not as nicely as the first two that we looked at last week. It's a bit limited here, but we'll continue where we left off in terms of the structure, in terms of the notes. Let's add the same things here. Okay, so you can say notes for disclosure, underline that, and then we can show the two different statements. Right, so you'll always have to show things in the statement of comprehensive income or income statement and statement of financial position. Okay, so exactly the same as the ones that you've done before. Okay, draw a line, leave some space at the bottom because we still need the debit and credit. Okay, so just leave like 3 lines or so. Perfect. Right, income statement heading, statement of financial position. Just to revise, income statement, what elements do we record there?
And the profit for the expenses.
Yes, correct. Okay, we need those two to work out the profit. That's right. Yeah, financial position, and then we need to show the disclosure. So let's first discuss the income statement. What are you going to disclose in the income statement?
The accrued.
The total. All right, so you'd have to show under the heading income, you would have to show, what income would you call this actually, just to test you? Rent income, yes. Okay. Rent income, rent received, either or. Okay, you'd have to show working for this. So you'd say rent income brackets 2,500 plus 100. And then disclosure wise, you would show the full amount, which is 2,600. Okay, that's what the accountant would show in that financial statement. Right, and then the next one, statement of financial position. But where would you put it? Which one? Current. Okay, good. Okay, so under assets, current assets, you would have a line item for the accrual. Right, so we would call it the accrued rent income. Right, an accrued rent income is an asset.
Yeah.
But what is it going to be recorded at? 100. Good. So you only show the difference. Okay, the amount that's outstanding. Okay, and that's it. Just to recap debits and credits, at the bottom, what do I debit, what do I credit?
Okay. Yeah, but accrued. No. Yeah. Debit accrued income and credit income.
Good. Okay, so debit the asset because I'm increasing it or I'm creating it. So debit accrued rent income 100. In brackets, you'd have to say what it is. So it's an asset that's increasing. Okay, those basics are very important. That's why we're recapping that. Okay. And then we're increasing the income because it's too low. I only received 2.5. I should have received 2,600. So I need to increase it. So how do I increase income? Crediting it. Okay. Income increased. Alright, that's it. The last one is what they talk about here. On the last page, they say recording revenues that are paid in advance. Right. So if revenue is paid in advance, from our perspective, it's income that we receive in advance. Does that make sense?
Yeah.
Okay, so always look at things from the business's point of view. So even if they talk about like paid in advance, okay, this is looking at the business point of view. So someone has paid us in advance. Here they said, sometimes commissions receivable or rent receivable may be paid in advance. The amount relating to next year will not be included in this year's financial statements. Okay, that makes sense. Because how long is the year? 12 months. So if you've received more than 12 months, can you record more than 12 months? No, because the year is only 12 months. Okay, so let's put a heading. Number 4 would be income received in advance / prepaid income. I see they use the word prepaid here, so let's use the same vocabulary. Either or, both would be acceptable. Okay, perfect. Let's describe it. So we've given a definition for all of these. How would you describe this one?
We haven't basically given the service yet, but we're getting the income. So
exactly, good. So you would say
income not earned.
Good. Yes, you can say income that has been received but not yet earned. Perfect. That's exactly what it is. Yeah, income received but not yet earned. Correct. So how would you describe that?
Income received but not yet earned.
What elements?
Maybe.
Definitely. Okay, so why a liability? Well, there's an obligation. Right? If you've received something that you haven't earned yet, you have an obligation to earn it, okay, to render the product or service or return the income, okay, depending on what the scenario is. Okay, so obligation is the keyword, obviously. Okay, so timeline again. We'll use the example that's here. Just to read it, they talk about Henry, H. Howe or Hugh. Okay, Hugh. Hugh works on commission for Henry. Hugh has earned 5,320 commission for the year ended 31st of January. At 31st January, Hugh received commission payments of 6,000. Right, so he was lucky. He received more than he actually earned. Okay, it's not a very good example because commission generally has to be earned first before it's paid, generally. Okay, but there's probably some relationship here between him and the owner, okay, of the business, and the owner decides to give him more than what he earned. Okay, maybe it's a bonus or something, but they don't specify that. So we'd probably assume that he's been paid ahead of time. Okay. Alright, so in terms of your timeline, okay, so now with this one, your end of the year needs to end in the middle. So like similar to one of those other ones, yeah. Okay, so 31st December actually needs to go there. Alright, so 31st December. Okay, then you need to show 1st of January. Well, we can just give this a date. We can call that March. Doesn't really matter. Alright, so the question said, Hugh received commission, okay, of 6,000. So he received a payment for 6,000, which was more than what he earned during the year. Okay, so bullet-wise, you can make a bullet and you can say, a total was received, a total of $6,000, or just say $6,000. Total of $6,000 received up until 1st March. Let's give these dates. So December, you can call that 2017. And then March, you can say 2018. Okay, so we can say total 6,000 received up until March 2018. March 2018. Okay, second bullet. The revenue earned up until 31st December is. Revenue earned up to 31st December is, and then we'll use this amount, 5320. 53200, yes. Okay, 5,320. Perfect, that's everything we need. So now we need to take that and we need to plot it on our timeline. Alright, so looking at that, you're going to draw a line from January to March. And what are you going to show?
The total.
The total. Okay, so we're going to show the two amounts. The first amount was describing the full amount that was received. Okay, so we would write that. We would say received 6,000 for the entire period. Can you record the full 6,000? No. How much should you record?
Minus this.
No, you should only record that.
Yeah, the difference.
Yeah, so we would have to highlight 1st Jan to 31st December.
Yeah.
Right? Because remember, accountants provide information for the financial year.
Yeah.
Okay, we don't look at anything outside the financial year because the financial year is 12 months. Okay, so I'm going to be looking at 1st Jan to 31st December, exactly. Okay, so you've written received 6,000 for the full period. Now we need to show the little bit. So the highlighted yellow part, you can say 5,320 is earned for this period. So a little line and then just a little note. That's the amount that we've earned. Okay, so the keyword would be earned. Earned 5320. Perfect. So now what is the income received in advance?
It's the difference.
Exactly. Okay, so now that part you're going to highlight. Right, so that's the important bit. That little bit there is referencing the liability.
So
yeah, you'd have to work it out. Did they give it here? Yeah, they do, 680. I'll just check it. Okay, good. Alright, so 680 is income received in advance. And that you need to highlight because that's what we're looking for. We're looking for the accrual.
okay, so now
Yeah, we can say NB at the bottom. 680 is outside the financial year. Second bullet, this would be a liability to assets. This is a liability for the current year. Just specify. Okay, for the current year. Right, because it's still income. There's nothing wrong with it. Income is income. It's just income that doesn't belong to this year.
Yeah.
It belongs to next year. So for this year, we're going to take it out. Okay, so notes for the disclosure. Same thing again. 2 columns, income statement, and then statement of financial position. And then that concludes that chapter. Okay, we've actually added it. We've actually improved on it because the last 2 were very limited. Obviously, your notes are better than the page that they've just given. Okay. Now leave space again at the bottom just for the debit credits. Did you make this posters yourself?
Yeah.
Wow, they look good, yeah.
Thank you.
Okay. Alright, so the first thing we need to look at is the income statement. So how much are we going to show in the income statement? What do you think?
The income statement you'll show for the year, so you'll show this.
The 5320, good, but we need to show working for it. Okay, so we actually need to adjust the income, the rent. Was it the rent? What did we say this was? We didn't actually specify. It doesn't matter. It could have been any income. Maybe we should mention that. We can call this rent income is fine. Commission is a bit of an odd one to use because you wouldn't really pay a commission to someone if they haven't earned it. That wouldn't make any sense. Okay, so just keep it rent income. Okay, but in brackets, you're going to show what?
6,000 minus.
Good. 6,000 minus 680. Okay, because as a business, you still need to show 6,000 in your books, but you're just adjusting for the accrual. Okay, 5320 is the amount that's going to be disclosed. Okay, it's the net amount. Good. Okay, and then next half, or the other side of the page, statement of financial position. Where are we going to put this? Where will we put the adjustments? Definitely. Okay, so the liabilities section is going to have an accrual. What section under the liabilities? The current or non-current?
Non-current.
Non-current means long-term.
So current.
Current is short-term, so this would be current. All of these are actually current assets or liabilities. Okay, so we need to show what?
Accrued income.
No, not accrued income. We're not looking at accrued income.
Income received in advance.
Yeah, income received in advance. If we want to be more specific, we could have said rent income received in advance. Either or would have been okay. And what will you show?
6,000.
Not 6,000. Just the
680.
Just the 680. That's it. Okay, you would disclose that. Right. What do you debit? What do you credit? What working would we have for the
debit? Debit rent income.
Debit rent income. Yes, because you're reducing it. Good. Okay, so rent income debit. The reason in brackets would be what? Income decreasing.
And then credit.
Income received in advance. Exactly, the liability part of it. Okay, good. Perfect.
So it would be liability decrease.
It would be liability increase. Your liabilities increase on the credit side. Okay. Well done.